Hi, this is Ali, the mortgage planner. I'm here for the second time, and we will be talking about how to create intergenerational wealth for yourself and your family, and helping you along the way. See you soon.
Now, ladies and gentlemen, welcome to yet another exciting episode of the Online Prosperity Show, the number one place where coaches, consultants, and service-based business owners come to learn how to build a profitable and enjoyable business, and all without the burnout, confusion, or chasing algorithms. I'm your host, Prosper Taruvinga, and if you have ever wondered how to use your finances and have a property strategy that creates real freedom, and not just financial freedom alone, but time freedom as well, then this is the episode for you. Today, I have the pleasure of welcoming back for the second time, and as they say, by popular demand, Ali Mehboob. Now, Ali, welcome back to the show, sir.
Thank you, Prosper. Thanks for having me. Good to be back.
Great stuff. I know when we reached out, we're like, oh, everybody was so interested in the last episode. And you're like, okay, let's just make a time. So thank you so much for that. Now, for those that are seeing Ali or meeting Ali for the very first time, he's the brilliant mind behind Noor Finance. And let me tell you, this isn't his first rodeo. He is definitely going to be showcasing to you what he does and who he does that for. And just so that I can give you a recap, the last time I spoke to Ali, we dived into his personal story from corporate uncertainty to becoming a mortgage planner and helping families build intergenerational wealth through smart credit strategy. So this time we're going to go deeper into the how Ali actually helps his clients turn those home loans into wealth building tools, and how faith, purpose, and planning actually comes together to change our financial futures. So before we begin, wherever you're watching or listening, don't forget to subscribe so you never miss another episode like this. Now, Ali, I'm really excited about what we're going to jump into today, because today we're talking about the how and how people can actually create that intergenerational wealth. But now that we're talking about finances and things of that nature, is there anything that you just want to say before we actually jump straight into it?
Thanks, Prosper, for that lovely introduction. And the first time when I had meeting, it was really popular. So I'm back again, first of all. So thank you. What I would like to say is that any advice that I provide is going to be general in nature. If you want specific credit advice, please get in contact. They will be addressed to my website, my contact details, and we can book in a 30-minute free of cost consultation and go through options that are available to you.
Absolutely. And thank you so much for that. Now, as you said, your episode was very popular, but you already know there's 22,000 mortgage brokers in Australia. What really makes Noor Finance stand out?
Yeah, I mean, that's a golden question there, because it's really important to know what your strength is as a mortgage broker. So when I started mortgage broking, I soon I realized that I need to be different, and I need to be doing something different to stand out in the crowd. And that was basically providing a solution-based lending, and not just a transactional broker, but a broker that will hold the hand of the customer from start to finish. So I decided very early on that I will not be a transactional broker. I will be a broker that will show empathy to the clients. So walking in the customer's shoes and understanding their situation, and not just taking the orders from the clients that here is the loan, here is the features and benefits, and off you go. But a broker that will understand the short term, medium term, long term goals of the client and review their full financial position, and also look at how we can not just help with one owner occupied property but structure the loan in a way and go to a lender where the client can expand their portfolio in future to buy an investment property, whether it be inside superannuation, whether it be held outside superannuation environment. So basically taking them to a lender which is not just the cheapest out there, but a lender that can actually unlock the equity later on for the client to take that equity out to buy the next property. And obviously, for me, the real work starts once the loan is settled, because that's where clients will be having lots of questions. How do I set up my offset account? Where do I call to put money into my offset account? What happens on internet banking? And giving them that call after 6 months, that hey, we will look at your rate again and we'll see if we can do any better with your rate. So it's about having that open mindset and helping them from start to finish.
Absolutely. And thank you so much for letting us know that. So you wanted to stand out as a mortgage broker, but the people that you also work with have to stand out to you. What sort of people do you enjoy working most with, or what sort of solutions do you provide?
So I enjoy working with my most interesting one is the first home buyers, because with the first home buyers, they have lots of questions. And that's why I did speak to you, Prosper, about writing a book for first home buyers, because they have a lot of questions. So we can all compile everything together. And I do have some home buying guides on my website as well that actually showcase a lot of different questions that the first home buyers are asking. How much deposit we need, what are the government schemes, if I want to go into an Islamic finance, how much deposit I need as a first home buyer. So all those questions we've put it as a in our home buying journey. So first home buyers I really enjoy, but on the flip side, I also enjoy working with investors who are looking at buying their next property. So unlocking the equity, buying the next property, doing the pre-approval, and then working with a good buyer's agent to help the client to buy that property. Because what we find is that with the owner-occupied property, generally clients are aware about where to buy, because when you're buying your first property, you would buy the property where you find the best school for your kids, where there is close shopping center, where the train station is nearby. But when you're looking at an investment property, these things are not that relevant, because you want to see good rental income, low vacancy rates, and you want to see that there is capital growth. So it could be in a regional location. That's why we need a savvy broker, and also work with a buyer agent. If the client needs assistance, they can help them secure that property. But if they have good knowledge and good numbers, and they can do their cash flow statements, and they know what, because it is a responsibility at the end of the day, because we do see that a lot of the clients who are buying, sometimes if they buy in a location where there is a lot of out of pocket cash flow outflow, they do get stuck. So it's important that you look at their cash flow, and cash flow is important in deciding, and that's where we get a buyer's agent to help them. If they know their numbers, they can do it themselves, but we do the pre-approval for them, and then they go with the pre-approval and buy that property. The third one that I really like working with are the more complex transactions, and they are more like self-managed super fund. So those clients where they have their existing SMSF, or they're looking at rolling over their super fund and buying property through there. That's the other one that I closely work and enjoy working with. So, yeah.
Absolutely. And thank you so much. And also, somebody can start off as a first home buyer, and then from there they can move on to be an investor, and then they can then start working on their SMSF. So you literally can work with somebody throughout their whole property buying journey, right?
That's right. Because what happens is that if you look at the self-managed super fund, a lot of the self-managed super funds are set up at a high interest rate, and there used to be banks doing SMSF as well, but a lot of the banks have stopped. Like most of the banks have stopped doing that because a lot of compliance as well. So now a lot of the tier 2, tier 3 banks are doing it, but clients are paying 7 to 8% interest rate. So I'm doing a lot of the refinance, easy refi to a lot of the banks where the interest rate is close to 6%. 6.19 is the latest one I did, from 7.5%, and it saved them thousands of dollars. So yes, we can help them along the journey, but we can also help them with refinance and potential saving them thousands of dollars again as well. So so those are the different clients. So just to give you an example, today I had one client. He called me and he said that he is working with a tier 3 lender paying 7.5%. He would like to refinance. So I gave him a great offer of 5.38 variable rate, and then a cashback of $2,888. So what it does is basically the interest rate reduces by almost 1%. That's a saving. Plus, he'll be saving on the refinance cost as well. So discharge fee, settlement fee, PEXA fee. So that 2,888 will cover that as well. So he's and the main thing is that you keep the term of the loan because you have to compare apple with apple. So if you extend it, then it will restart again. So the idea is to keep it, if it's 25 years, you keep it 25 years, and you let the client know, unless they have affordability concerns and they want to stretch it, or if they're taking cash out, then I would stretch it over. But generally, I like to keep it that way, and based on whatever they like. So that's where a lot of my refinance clients get value from me, because what basically broker industry has done, they're writing 75% of business right now, and the reason is we are just a phone call away. We do all the hard work, and it does not even cost a cent. And the results are amazing because we have access to those multiple lenders, which everyone has. But it's about how you apply and get access to that. Because what I did when I started, I initially realized that I would need access to all the lenders on the panel. And literally, I actually got accreditation for all the banks on the panels to make sure that whoever comes, I have a solution for everyone. And that's where my aggregation team was really helpful. They were able to help me with getting that done very quickly for me.
Absolutely. And thank you so much for, letting us know all of that, because so many people, when they come to a mortgage broker, they're not quite sure what to ask and how to actually go about knowing, what the next logical step would be. So you did mention some of the people that you work with are investors, and obviously investors have somewhat complicated, requests, because they want to maybe release equity from another property while they are waiting for settlement or things of that nature. So there's too many sort of moving parts. Maybe walk us through, how you approach investment finance differently from any other typical broker, and how you actually work with investors.
Yeah, sure, definitely. So first of all, I mean, if a client has been with me for some time, or I see that they have equity in their home. So say, for example, if the loan is say 600,000 and the value of the property is 1 million. So there is that definite equity in there. So when I'm having a conversation with the client, I will ask them, what are your short-term, medium-term goals? Are you looking at buying an investment property? If they do show that interest, that they have that interest of buying the investment property, then I mentioned that you can pull equity out of your property. So we need to buy a property without lender's mortgage insurance. You basically need a 20% deposit. So you have your owner occupied property. Okay, so you take the 20% out from there, and plus the stamp duty. So it's roughly 25% you take out from the owner occ, and because you're buying it because you're investing it for investment purposes, that interest only portion, say 200,000 you took out for stamp duty and the 20%, that is generally tax deductible as well. And then you do a pre-approval for the 500,000 to buy the investment property. Okay, so then they will have the owner occupied property, one loan, then the investment property, stamp duty and 20%, 200,000, and then 500,000 for the investment property. They can start searching, and once they find the property, they give us the contract of sale. We can start the process for the settlement and so forth. But one of the most important things a good mortgage broker looks at is the borrowing capacity, and also talks about trust structures as well. Because if you say, for example, if husband and wife, they have income of 1 million, they have a limited borrowing capacity. So bank would borrow up to say 6 times of their income. So to be able to put that property into a trust structure, and making that trust, working with a good accountant and making that trust in a positive way with rental income. If it is generating income and the trust is positive, you can go on to the next trust and buy a property and exclude this trust from servicing. So that way you can actually buy multiple properties, because that trust is a structure which is profitable in itself. So we exclude that for the next one. But if you don't have the trust structure, then obviously you're limited to buy only one property or two properties at most. There are different trust structures. There's a discretionary unit trust. Then there are family discretionary trusts as well, that they can talk to their accountant and they can set up as well. It is obviously not for everyone. It is for people who do understand, because there are costs involved as well. There are legal implications, speaking to an accountant and an investment savvy broker as well.
You see, from what you're saying, it does look like there is a big learning curve. And from what I've noticed, with talking to you in the past, you're really big on education, even mentioning a possible book that you want to do maybe for first home buyers. Why is financial literacy very critical right now, especially in Australia's, property market?
Yeah, I think it's really important, because I see that there's a lot of material which is online. But to get good qualified advice, you need to go to the right people. We have seen a lot of things that have happened where not so good advice has been given. And that has, if you look at GFC, around GFC, and later on down the path, there's been some advice given which was obviously not in the best interest of the client. But obviously with us as mortgage brokers, we have a best interest duty. And coming from a banking background, I've always done the right by the customer. So it came actually naturally to me when I heard the best interest duty. So I was like, I always do take that into consideration. It's not about my best interest, but best interest of the client. Even if I have to walk away from a deal, I will walk away as long as it's in the best interest of the client. And just to give you an example, like when someone comes to me and they have just recently started working with a broker and it's been 1 year, and they say, I want to refinance. My first question is, have you spoken to your existing broker? Because they have done all the hard work. And if you refinance within the 2 years, they will get a commission clawback. It is the ethical thing to do. So if they say, no, we had a conversation and we didn't get a good service, that's where I will come in and I will help them. And help them with refinance. But if they say no, we haven't had a conversation, so I refer them back to the broker, because I know if it happened to me, I would not feel good as well. So it's actually following your ethics, your principle, and making sure you're following that, and it goes a long way. And then you build that credibility and trust that because some people they just realize that these things can happen and they can have their way. But once you educate them, they actually respect you and appreciate you more in that regards.
I also think because part of the service offering that you do or how you really want to work with people, you just don't want to do one-off loans. You actually focus on building intergenerational wealth, especially for your clients. And what really that strikes me now is not only are you, educating your clients, but if you write a book or you put something out there or information or blogs, they can also teach the next generation that is coming up so that they won't lose that hard earned acquisition or investment that has happened. Is that the reason why you do that, or is that completely different to the thought process that you have in your business?
Absolutely, you are right in saying that, because what I'm seeing now is that clients who I have helped for their owner-occupied refinance, they are reaching out to me for their investment journey. Some of them want me to refinance their SMSF loans. Even one of my clients based in Melbourne, they reached out to me and he said that his son has started his first job and he's a first home buyer and he's looking to buy a house not far away. So as you said, I referred him to the website. I said get him to start watching the videos, get a savings plan in place, because I worked as a savings specialist at Commonwealth Bank, so I do understand budgeting as well. I do understand the saving aspect as well, how to have that deposit and what is needed, and what does bank take into consideration when they are looking at your credit application. So I give them all those tips when I worked as a savings specialist to help them to save for that deposit. So it's obviously not just doing one credit application. Like I had one client today, I spoke to them. They're not getting the enough borrowing capacity, but he said he's getting a pay rise start of next year. So he's going to come back to me because of the borrowing capacity, we could not get him what he wanted. So it's a long game and it's a game of patience, and also making sure that, when the time is right, the client will come to you. You don't have to rush or try to get the deal across the line, because they will come to you when they have time and when the time is right for them.
Absolutely, because when the shoe fits, you can actually wear it, and things of that nature. Now, yes, we're talking about you educating your clients, but how do you then also keep yourself across all the nuances of what's happening in the industry and learning, because you can't pour from an empty cup yourself?
Mm-hmm. Sure. It is a dynamic industry, and especially looking back, we had 12 interest rate rises and in the last couple of years, and we had 3 drops in interest rate from the start of the year. So there is a lot happening. Obviously, Melbourne Cup, they have decided not to raise the rates, but not to reduce the rate. They have kept it on hold, and the prediction is that there might not be future rate cuts as they were expected. So it's really important to keep yourself up to date. But the thing that I enjoy the most is actually learning. I learn every day. I learn something new, and that's what I really enjoy. Having those banks on my panel, it gives me the ability to get an understanding. So I always try never to miss a webinar by the bank that I deal with. So I keep myself up to date. Once in a day there'll be a webinar with any bank. Once a week they will have a webinar for one bank, and one bank next day. So I try to have those webinars watched. And plus, our aggregator is really good as well. So they do have a deal scenario desk as well. So every month they will sit down and we will discuss our deals, our scenarios. So it's really good in that regard. So it's a dynamic industry. You keep yourself up to date. And there's a lot of information out there. But I think when I started, my mentor gave me a very important trick to learn and be successful at mortgage broking, and that was to pick up your niche and then understand the policies of 3 to 4 banks, not all the banks, 3 to 4 banks. So that way when you pick up a niche and you cater and you know the policies of certain banks, you can actually be really confident at explaining what, say, for example, Bank of China is offering, what Commonwealth Bank is offering, or maybe two or three other banks. So I did that initially, and that was really good outcome as well.
Now, we've already established your niche is, investors, first-home buyers, and people that are looking to consolidate their SMSFs, right? And according to your mentor, who then told you you have to be very specific with maybe three or so banks, but you operate in a very unique area, which is Sharia-compliant lending. Now, for those that are hearing it maybe for the very first time, what does it mean, and why is it so important that the clients that you work with understand the powerful tools for wealth creation that you give to them using this concept?
I do remember that actually it was a light bulb moment for me as well. And someone said to me that, as a Muslim, you can't buy a property. So I was like blown away with that comment, because I knew that there are solutions available for clients who have a deep Islamic faith and they are looking to buy a property, because you can't be renting all your life. And definitely there has to be a solution. So with Islamic finance, it's a solution that is worldwide for Muslim, but non-Muslims as well. They are actually getting a lot of the Sharia loans as well. So it's not like, if you look in Malaysia, there were some statistics that there are more Christians who have taken on Islamic banking compared to Muslims as well, because of the terms and conditions. But in Australia, predominantly, we are seeing clients that I cater for. There are few tier 2, tier 3 lenders who actually offer Sharia lending. So Sharia lending is based on a principal and rental agreement. So interest is not it's not an interest based agreement. It is a principal and rental agreement. So due to some religious beliefs, they have obviously excluded the word interest from the arrangement. So it is a principal and rental arrangement. So you are basically a tenant paying rent. And then once you end up paying rent for 30 years, property is yours, and title is in your name, basically. So it's kind of a same arrangement, but it's on a principal and rental arrangement. Rates are, again, a little bit different as well. So there used to be a time when interest rates for Sharia lending used to be really high, but now you can, I was just refinancing a client of mine at 5.44%, less than 80% LVR, which is pretty competitive if you look at in current scenario. So that was an easy refinance. Even with the new purchases, refinance, kind of same rate you can get. And it caters for a community that obviously has a deep faith. And, I talk about with them when it comes to the fact that they talk about, whether it is Sharia compliant or not. So there is a certificate on the website, say, I'm for these three lenders that I work with. One is Al Hijaz, one is Ijara Finance, and the other one is Access Lending. So they do have a certificate that makes it halal. So their funding that is coming from is from Colcap, which is basically a funding line, which is now up to $19 billion. But the funding is not halal. But once the transaction occur, that transaction certificate makes it halal, because the contract is halal, which makes it Islamic ijara leasing, basically financing is under the Islamic principles, because it is principal and rental arrangement, and there is a certificate and signatures by the Mufti that this transaction is permissible and as per the Islamic finance principle. So that's the one that when I generally talk to the clients, I give them all three options. I discuss all the fee structure, but then I send them the certificate as well. And if they are happy to proceed with that, we look at arranging that for them, because it gives them satisfaction as well. and I don't actively ask my clients if they are Muslim that, would you like to do Sharia? Because it's their choice, it's their faith. Although I'm Muslim myself, but I don't kind of promote it in a way because it's up to them. But if they ask me, then I can help them and make sure, and I do my due diligence, making sure they get the right product. Because some of the other lenders, they do charge a 1.2% upfront fee as well, which makes it very expensive for the client. So I actually tell them upfront, these are the fees and structures. Which lender would you like to go with?
Absolutely. And thank you so much for sharing that tidbit of information. But for those maybe Muslim clients who might want to invest ethically, what sort of myths or misconceptions about Sharia lending do you often have to debunk from them? Like, what do you have to really get them to understand to convince them that, yes, this is actually halal?
Yeah, so there has been a bit of a misconception because we have seen in the past, there's been some developers who actually ran away with people's money, and they did not deliver on their promises. And it was up in media as well. There was one particular developer that came in news as well, big time, and it was a massive loss to a lot of clients. But that was a developer. We're not talking about the finance company here. So when they say they do talk about it, that this is what has happened in the past, and how you can make sure. So I just obviously tell them that this is a finance company. They actually helping you get into the market, you foot into the door, and they have all these fantastic options that are available for you to buy your next property. So with Sharia lending, the things that we have to look at is obviously none of the banks are actually part of the 5% home guarantee scheme. So if you wanting any lending from them, and you don't want to pay the risk fee, which is the lender's mortgage insurance, you have to come up with a 20% deposit. 20% deposit plus the stamp duty, because if you're looking at 5%, then you have to pay the lender fee, a lender mortgage insurance. So to help them, they need a 20% deposit plus the stamp duty, and obviously income to support the serviceability. So that's the thing. If they are on an existing loan and they want a conventional loan and they want to come to Sharia, we can do easy refinance, no issues on that as well.
Absolutely. Now, obviously that is a very unique offering that you're offering to most of these people. And I wish a lot more people would, hear this and take you up on that. So we've done the first home buyer and the investor. Now with the SMSF loans. Now, those sound a lot intimidating. I'm not quite sure. You need to have a certain figure in your account. The interest rates are a little bit different. There's a lot of compliance that goes with that. How do you simplify that process for your clients so that they actually see the potential rather than the paperwork and the intimidation that comes with it?
Yeah, absolutely. I mean, SMSF, there is hundreds of papers involved in SMSF. It is daunting as well. So first of all, so what it is basically, when you talk about self-managed super fund, you are basically going to be managing your super funds yourself. So currently, if you have a super fund, say with industry super fund like Host Plus or MLC or any of those, they are the fund managers and they are basically managing your money. But when you decide that you will be the trustee and you are going to manage it yourself, then you need to audit the fund, then you need to make sure you're compliant with CIS Act, and so everything rests on your shoulder and your accountant shoulder, and also getting legal advice as well. So that's where it's really important that you are putting all your hard-earned money into one basket, which is called a property, and then you are investing. But we see a lot of people actually doing that because things like GFC have happened in the past where people investment have gone down. When we look at the returns of the super fund, they are generating up to 8 to 10% unless you're in a high growth fund where you could be potentially earning 10-15%, but the risk is high as well. But we have seen that property is doubling every 10 to 12 years. So when you retire at the age of 60 with 8% return, if you have 150,000 in your super fund, max you will be getting is maybe 500,000. But when they do the numbers and property, they say, okay, we could have a $1 million property at the age of 60, we can retire, and then we can sell off without any tax. Okay, so with superannuation, obviously, as you are aware, that over 60 there is no tax. Obviously, while that money is invested, there are benefits in terms of the in terms of the capital gain tax as well. So investment earning tax is low as well. So those benefits compel people to start a super fund. So they go to a financial planner is the right place to go and talk to them, and then you engage a accountant and a mortgage broker with that. So generally speaking, if you are buying a property, say 600,000, you need a 20% deposit. So that's 120, plus you need stamp duty, say 30,000. So 150 minimum. Okay. So 150 plus your legal cost, say 150, 155 for 600,000. So the step of the process is the first step is to set up the trust deed and then the bear trust. Okay, so so that needs to be set up by the accountant. Once that is set up, you open up a bank account. Once bank account is open, you roll over your super fund into the bank account, and then obviously you will have your pre-approval ready to go with the bank. And once you rolled over the money, you can start looking for the property. So that money can pay for your stamp duty and the 20%, and then you can buy, say, 600. So 420 would be the 420 would be the loan amount, and then you have the rest is coming from there. So that way you are able to buy that property. So the pre-approval lasts for 90 days. So it's a conditional approval. You can go search for a property. Once you find the property, you put down a deposit, and then you have the cooling off period, say for example 10 days. At the end of the 10-day, you pay 10%, and then the rest is paid at settlement. Could be 45 days settlement. So that's the whole process. In terms of the settlement and process is pretty much the same, but main thing I think which is important is getting to speak to an accountant and setting up that trust. But also the other thing is, all as I said, very important is actually doing your numbers and doing the cash flow analysis, making sure you need to look at what interest rate you are paying, because interest rates are higher. Whether your rental income is covering, it will be negatively geared unless you bring your LVR to say 60%, where you put a lot of money in yourself, and then you bring the repayments down. But most of the time it's going to be negatively geared. Whether you can afford $1,000, say for example, a month, if you're not getting enough rental income. So that's why it's important to pick a property which has a good rental and a capital growth. With SMSF, you can't take the equity out and buy the next one. The only way to do is either sell down and then use that money to buy the next property, or you go again. So you recontribute into your super, build the money, buy the next property, and you keep this one, or you sell down and so that's how it works. But it's the most interesting one as well, because it challenges me. It's really interesting, and it takes long, and these clients basically, once someone is in a self-managed super fund, they are in it for a long time. Because also wanted to mention to audience as well that the exit fees are a bit higher as well. So make sure if you are getting into a self-managed super fund, select a good SMSF straight away, where you're getting a good rate, because later on there could be a $2,000, $2,500 exit fees just to exit from the fund. Okay, so I had clients who were happy to pay $2,000 fee because they were getting a much lower rate. So it's good to go to someone where the rate is lower, so you're paying a lower rate straight away, not go into a higher one and then try to refinance, because it's going to cost you a lot as well.
You see, from all of this, it really sounds like there's a lot of learning to be done, both on your part and also on the part of the client. And I don't think all the other mortgage brokers take their time to really immerse themselves like you have. I want you to be honest with me, Ali. What's one thing about the mortgage industry that really drives you crazy that you wish clients would understand better before they came to you?
I think some people, they call me and they say they have $1 million in the bank and they want to buy a $2 million property. So when I tell them that, serviceability, borrowing capacity, income, and having a deposit, they're all different things. So to be able to, you need to be able to service the loan, and that is based on your income capacity and future capacity to earn income. You could have a $1 million in the bank, but you can't buy a $3 million property, because if you don't have a job, you can't service the loan. So sometimes that's a question I get, but I think if they get to understand that, and I think I will harp onto it in my book as well once I write that, that's the basic things that, and obviously as a mortgage broker I understand, but I do appreciate, they are here to talk to us so we can guide them and help them in a way. But that's one of the things that I would like more education on. And I think financial literacy should start from very young age. If we have a highly financially literate children and childhood, and they understand the value of money, they can be retiring at the age of 60 if they put a lot of the things and a lot of effort in investing as well, because there are a lot of options available in terms of diversifying as well, not just in property itself. There's there are share funds available as well, where if you invest today and you look at the last 20 years, like if I give you an example like Vanguard, their growth funds, and those ones, people have generated a lot of wealth through there, where they have invested their kids' money in there as well. But it comes with their ups and downs, but there are great ways to diversify. Property is one of them. Yeah, but I focus on the property because that's not my forte.
I can only imagine. Yeah, there's so many things that you can be doing, but yeah, let's stick to property. Now, you also mentioned, that whole learning curve, and you mentioned that somebody might call you and say, "Oh, I've got $1 million in their bank." And to me, $1 million represents, wow, you've made it. You're actually good. But you're saying that person still can't get if they're going to be shooting high. And my question now is, you often help first home buyers. Do you think owning a home is still a realistic dream for like the young people who are starting their first jobs? If you're saying that, oh, you've got $1 million, but you still can't, get into the property that you like.
Yeah, I think when I was working at my last role, I remember I had some graduates, and I spoke to them, and they said, "Oh, it's so hard to get into the property market. I will just wait forever to build up that deposit." So I had a really awesome conversation with one of them, and I explained to them the 5% home guarantee scheme. And I still remember that she was I did my cert 4, and I was on the path to becoming a broker, but she was really impressed that she didn't knew that you can buy a house as little as 5% home with home guarantee scheme. And I always recommend my clients that when you are buying your first property, always go with the property where you are living in and the area you would like to go in. And the reason for that, why I say that, is there's so much money on the table by the government. There is a stamp duty exemption under 800,000 in New South Wales. Okay, there's first homeowner grants as well. So if you're going to be doing rent vesting straight away, you will miss out on all of these, because it's when you buy the next property, you will have to pay all of that. So you get all these wonderful exemptions, 5% deposit. There's no spot caps anymore. There's no income caps anymore. So avail those benefits as a first home buyer. And once you have done that, because the responsibility of taking action lies on you, because there are people out there who are buying their second, third, fourth property, whether in trust, whether in SMSF, and they are changing lives for themselves and for their family. If you're not taking action, I can bet on that after 10 to 15 years or even 10 years, you will be thinking, I should have bought that property 10 years ago. And I do see people now that they say, oh, even some investors I've seen, they bought it at 200 and they sold it at 400 and now it's at 1 million. And they're saying, I should have damn kept that property. And that's the beauty, that, you just, it works while you sleep. And basically, yeah, as long as it's in a good location, you've done your numbers. I've seen people selling investment properties as well because it was not in the right location, or it was too much outflow in terms of cash as well. So yeah, really important. But it is a dream which is achievable very much, and I see day in day out. I think the roadblock is speaking to a professional. Once you are in the driving seat, speaking to a professional, they make it really easy for you. And mortgage brokers don't cost you anything. We get paid by the bank. So if it appeals, if the broker that you are working with, you look at their Google reviews, you look at their website, you book an appointment in your area. If you need help from us, we are available. We can help you. But it is a definitive dream, and it is achievable, because even with these days, a lot of the banks, they have a lot of, they don't need genuine savings and having a 3 months of money sitting in the bank account. It could be a gifted money, rental ledger. There are different ways how you can actually have that 5% ready to go. Yeah, and you could even start with a small unit or a townhouse, whatever is affordable. Don't stretch yourself. Once you are in there, it will just do its magic down the path.
Absolutely. I like that. And the compounding starts working. And like you said, it happens while you're sleeping. But all of that is a mindset, Ali. You know what I mean? It is a very different shift that if you speak to somebody at your Woolies today, they're just going to tell you, oh, but it's now $5.50. It was $5 yesterday. And for them, they're fixated on that 50 cents as if somebody's stealing money from their pocket. So when it comes to maybe just mindset shifts, maybe some people don't have people around them that can help them study things in a different way. You mentioned starting off reading something like Rich Dad, Poor Dad, and it changed your perspective. Now, if you could maybe go back and talk to the younger version of yourself before you had that light bulb, what would you tell him right now?
Yeah, I mean, I read that book and I was just blown away with the 4 quadrants of Robert Kiyosaki. I mean, he was not just a millionaire. He understood the employer, the investor mindset, the business owner mindset. Those 4 quadrants, he really understood. And definitely, I think what I would tell to my younger self is plan early. Basically, have that mindset that I think we do get stuck with the limits. If you put your mind to something, you can basically achieve anything, as long as you have the capacity and capability. Like if you're reading those books, with me, the good thing was I had the mentors, and I understood and I listened to them, and plus I was reading books as well to get ahead, and that is something that worked for me. I mean, there is still a lot to do. I'm still in my first year, but I feel that's where I feel more financially empowered now. I can make better decisions. We've just come back from a holiday we went on the cruise for 2 days from Sydney to Brisbane, and we got fed so much food. I loved it. And then 1 week in Gold Coast and Queensland. So that was a treat to myself, where I just shut everything and I went. But I imagine if I was working, I would have thought a few times before making that decision, because I would end up meeting my parents once a year. That is more important. So those are the just not just the financial freedom. And it was more about, once I have the understanding that my time is very important, I have a limited working career, how I can make full use of my working career because there's only limited number of hours you will work. And that's where I uh, changed myself. Yeah.
Congratulations. I think you've achieved something that most people only dream about. You know, the fact that you can just leave, and I don't know about you, Ali. I'm working right now, and I bet you are also, because because you can create for yourself, instances like this, and you're dealing with people you just love working with and things of that nature. That's remarkable. So you've done that. You've blended purpose, profit, and peace. How did your personal faith really influence the way that you've built Noor Finance?
Yeah. So obviously, I had the deep faith in myself as well, and obviously prayers of my parents and my family members. My wife has been really supportive as well, and she's doing a lot of Excel spreadsheet, and keeping all the budget and everything, making sure what are the expenses, what's the revenue, how are we going to be better in that space as well, because I'm busy writing loans. so, so she's the one who's doing that. Yeah, so that's how it's all working.
Absolutely, and congratulations. Now, if one of your clients was maybe sitting right here, with us, and we're just, sharing and talking, what do you think they'll be saying has been the biggest difference that you have offered them, as opposed to working with other mortgage brokers out there?
Yeah, so I think when I read the Google reviews, that's where I feel really happy from inside, because that makes me feel that I've made a real difference in someone's lives. To get an award at a ceremony, to be awarded the best broker of the year, is probably not, I mean, it's still very important to me, but more important is that review, Google review, where the customers say that my broker, the words that I actually highlight the words they use: responsive, quick, help me save money. So those are the words I usually get, which means that there was a benefit in them. The service was quick, the calls were answered, and they were able to save money with convenience as well. So those are the comments. We have over 35 plus 5-star Google reviews, and it keeps on growing, which is fantastic. And it's because of the, not just about what I do, it's about my team, my technology team, my website team. They've done a fantastic job. As you can see on the website, they have put a booking calendar there. They have a box there where you can go in there, and then I get the lead and set up everything. Whole of the team, the vision aggregation team, they have done a fantastic job in terms of reviewing our files, training us, and yeah, it keeps on growing, and it's a team effort basically.
Absolutely. And you know what they say: if you want to go far, you go alone, but if you want to go further, you go together. And for those that are watching, I just encourage you, go together with a mortgage broker that actually cares and is with heart. And lastly, Ali, you're helping families create legacies for themselves, and do more things and changing their lives and things of that nature. Mm-hmm. What's next for you, for Noor Finance? What sort of legacy do you want to leave behind?
Definitely. So that's a question that I keep thinking, and obviously, being in a business, you always think about scaling and what to do next. So I think one of the most important thing, and that was very close to my heart, was giving back to the community. So that's why we have sponsored a cricket club. We have sponsored a soccer team. So my son plays for a cricket club. We have sponsored that this year, and the soccer team for the 2 years. That's been fantastic. There are some photos on my website as well, so check them out. Then we have sponsored a badminton tournament as well, just to go out there, hand them vouchers. So basically, what it is that you're helping the club as well to get kids soccer balls, all of that with that sponsorship. Plus, we are also offering a reward voucher as well. So it's basically a referral voucher. So if they refer someone to us and they go through and the loan settles, we give $500 to the person who referred. So it's kind of a referral voucher we were giving, and obviously it's an encouragement for them to refer other people to us so they can get some reward as well. So that's very important, and I think I want to keep doing that. I want to keep doing more on the global stage as well, because if you are doing well, you should be helping others as well get ahead. So that's my concept. In terms of the business, we feel we can expand more, so that's why we've got Sadia in the business now. So she's going to be doing a lot of the back office. She has left her job and she's come into the business. So she's officially retired now. So I have retired her this month, so she can give full attention to the family. She can have more time for the boys and my lovely daughter. And plus, if she wants to work part-time, couple of hours in a week, she can do very well spreadsheet. So she can manage all the expenses and the income side while I write the loan. So yeah, so we are getting her, she's getting all the logins as well. If she has to support in writing the loans as well, she'll be doing her cert for. So those things are coming. We did decide to hire offshore as well. That is still in pipeline. But great things. We are signing new partnerships. Like we have Platform Finance, where we send all our asset finance deals. Then we have Loan AI options, where we do send a lot of the consumer stuff, because I predominantly focus on the residential for those deals, because it's a one-touch approval process for the client. It's much simpler. It's much easier. It's easy to deal with if they're dealing with professionals straight away. And I focus on the resi side. Yeah. So we are building up some good partnerships with accountants as well. So recently I signed up a partnership with an accountant. They are starting to refer me some clients as well. So it's so that's what's been happening.
Absolutely, and congratulations on retiring your wife. That is remarkable right there, because if you're doing this and it's literally having real world impact, not only for your clients but also for yourself, that is such a remarkable news. And I've got a feeling this is not the last time we're having you on the show with all this growth things that are happening. I think maybe we should get you back again, especially for your book launch.
Definitely. And I think with my wife staying at home, I'm getting the best biryani as well. So as you know that, I love biryani. So yes. I've been well fed as well. So
absolutely. And I can so foresee you buying land close to you so you can put a couple of horses there as well, because that's another leisure of yours, right?
That's right. Horse riding I love it. So growing up, I learned horse riding almost to the professional level, because I had very strict people who like the horse riders who trained me. And we used to ride horse without a saddle. So that was the extent of training we had. So it was a full on, but good, loved it. But yes, since I've moved on, I haven't ridden for many years. But now going to Pakistan this year, I do plan to play some polo and also do some horse riding. So watch that space.
Absolutely. I mean, I think it's like a bicycle, right? You might not have ridden it for a while, but as soon as you hold on to it, you know exactly what to do and things of that nature. So absolutely. Now, Ali, I can't thank you enough for the time that we spent on the call today. I mean, this is the second time, but it looked like we're just going into second chapter, because there's more chapters. What a powerful conversation, from balancing faith and finance to turning loans into legacies. And obviously, Ali has reminded us that wealth isn't just about the numbers, but about our values. vision and also the future that you build for your family. So if you're watching this and thinking, maybe it's time that I took control of my own financial story, I encourage you to reach out to Ali Mehboob at Noor Finance. I'll be putting all those links in the show notes, and you'll be able to find all the information that you want there. And for everyone that is tuning in right now, if this episode made you rethink about how you view money, purpose, or business, I encourage you to share it with somebody who would love to hear this today. And also join us on the next episode of the Online Prosperity Show, where we're going to be exploring ideas that will help you create a happier, wealthier, and more balanced life. Until then, make sure you're subscribed and stay prosperous. I just want you to remember one thing. Freedom starts with one decision. I hope you make yours today. Bye for now.